I'm Brian Arcese, Portfolio Manager on the Foord International Fund and Foord Global Equity Fund at Foord Asset Management in Singapore. Foord is a founder and employee-owned and managed firm focused solely on asset management. Just this year, we celebrated our 40th anniversary. Having just returned from Sydney and Melbourne, I'm excited to announce that 1 month ago, we opened and began offering our Global Equity Fund to Australian investors. Importantly, though only recently launching in Australia, we've been managing global equities for 25 years, and managing this fund in particular for over a decade. Based in nearby Singapore, we plan to be in Australia often, and I look forward to meeting many of you in person. Though we typically reserve these videos for reflecting on recent quarterly performance or to walk through portfolio positioning, which I look forward to doing next quarter, given the recent launch of the fund, I thought I'd outline briefly how we frame our investment philosophy. Fundamentally, we believe strongly that a company's earnings determine its value, and that over the long term, stock prices follow those earnings. As such, we spend a great amount of time forecasting a firm's earnings 3, 4, 5 years into the future and over the longer term. The importance of earnings in determining long-term returns cannot be overstated. Changes in corporate earnings have routinely accounted for over 90% of the S&P 500's price return over the past 50 years, the balance of total return being largely attributed to dividends. The second hallmark of our investment philosophy of equal, if not more importance, is managing risk. The understanding and management of risk is core to the Foord investment philosophy. Importantly, risk isn't what's occurred in the past, nor is it volatility. We spend our time forecasting not only the probability of each individual risk occurring, but also the potential impact of any number of outcomes. We worry about and forecast a far higher number of risks than come to fruition. If markets have been anything this year, they've been volatile. Our process has borne fruit in this volatility as we've outperformed the global equity benchmark by 2.7% when measured in US dollars, and by over 12% when measured in Australian dollars. As is embedded in our investment philosophy, our approach to finding value and managing risk is rooted in buying quality businesses underpinned by strong fundamental moats and real cash earnings. We continue to employ this approach, investing with conviction in those companies that meet our fundamental investment criteria while simultaneously offering adequate downside protection and good value. We continue to not only be vigilant, but also excited for the new opportunities that undoubtedly lie ahead in what we expect to be ongoing volatile markets.